everyone, and a very warm welcome to today's Experts for Expats webinar, Essential Information When You Are Moving from the US to the UK. My name's Alice, and I'm the webinar host for today. We are delighted to have you join us for today's session, where we will be covering all the essential information you need to know if you are planning a move from the US to the UK, whether that's moving your money, understanding your tax obligations, or preparing to adapt to British culture. This webinar will also provide you with helpful information if you've recently moved to the UK, and also perhaps some helpful guidance if you're considering moving to Europe as well. Although the specifics around tax and culture that we'll talk about today will be focused on the UK. Our speakers, who are leading authorities in navigating currency exchange, understanding tax obligations, and expat relocation, are here to share their expertise and answer your questions. By the end of this webinar, we hope that you'll leave with a clearer understanding of the considerations that are involved in moving from the US to the UK and the confidence to make informed decisions, as well as excitement about your upcoming move. So without further ado, let's get started. Welcome to our panel of experts. We invite you to introduce yourselves and your expertise, starting with you, David.
Hi everyone, my name is Dave Huggett. I am the founder and owner of Lucid Financial Markets. My expertise is foreign exchange and international payments and financial markets. Hopefully we can provide some good information today on those subjects.
Fantastic. Thanks, David. Jamie.
Hi everybody. My name's Jamie Favell. I'm the head of private client tax services at Tax Advisory Partnership. We're a dual UK-US tax advisory firm based in London. We're dual UK-US tax qualified, and we help lots of clients move to the UK from the US tax efficiently. So hopefully I can give you some good guidance and pointers this afternoon.
Great, thank you, Jamie. And Amy.
Hi there, my name is Amy Morton and my business is AIM Coaching. I'm an expat coach and consultant, providing personalised, practical, cultural and emotional support to ensure expats integrate into the UK without stress, overwhelm and isolation that comes with relocating.
Fantastic. Thank you so much, Amy. So David, we will come to you first today. So David, what is the most effective way that expats can transfer large amounts of money from the US to the UK in order to avoid potentially high fees?
For sure. So let me. I'm gonna share a presentation today just to give us a bit of structure and linearity to the conversation. So if you bear with me 1 second, I will just share my screen. Okay. So I think the best way to approach the question is to look at the problem and then talk about the overall sort of solutions and the issues that can be faced when moving money abroad. Certainly when we talk about higher value. For the benefit of the conversation, I'm talking about sums really upwards of sort of £10,000, which is where the compliance flags kick in and where not problems arise, but where the complications start to occur. There are 5 main points to the presentation I'm going to share today. Risks of buying another currency, so the associated risks with moving money internationally, the benefits of using a consultant like ours, a short case study on a client case that we've helped with recently, and then a little bit about how you would choose a consultant or a provider generally, the main options that are available to anybody that's moving money internationally, whether that's a business or an individual. So let me start first of all with the risks. So as we know, FX is a very sort of volatile market. It's a never ending market from a point of view of it's open 5.5 days a week, open Sunday night in Asia, closes Friday night in the US, and it moves non-stop. Now, this is moved broadly by the economic fundamentals of any nation, so the US, the UK, Europe. The best way to think about it is currencies are the stock of any nation. So if you think about it from that point of view, it makes it slightly easier to rationalize. And the impacts that we look at for as analysts is what's moving the market at any one point or any day or period, and what factors or events are we faced during the period at which a client is looking to move those funds. So if somebody is emigrating, for example, they may be looking at a 3 to 6 month lead-in time. So we will analyze the market over that period and try and identify where issues may come up or where the market may shift, especially erratically. Now, there are obviously things like black swan events, which we can't forecast. An example of that can be the trust event or wars or pandemics, whatever that may be. Those things we literally have to manage as they arise rather than try and forecast them because we can't. Intraday data release is simply economic data that is released on a daily basis throughout the market that does have intraday impact on how rates move and how they fluctuate. Politics are also a big issue right now, especially we've just had our own election here in the UK. We've seen very clear price action around that, and that's actually a very good example, not one I'm going to go into now, but it's a very good example of how markets move and how they trend. The next step, obviously, is the US election. That's a really important factor coming up, and that's going to start coming very much higher in the priority list in terms of how we're looking at ongoing price action. Transactional impact. It ties in really with these two slides are quite similar in terms of what I mean by transactional or operational impact is we've looked at the markets very briefly and how they trade and the necessity to keep an eye on those rates essentially and how they're impacting. When I talk about operational or transactional impacts, I'm talking about the physical movement of funds. Now, there are three main ways to move money internationally: banks, brokers, and fintechs apps, essentially. Now, they all have positives and negatives. Banks, largely, I think, being completely, trying not to be too obtuse, but banks are typically the worst of the three because they are very expensive, very poor in terms of service, very hard to generate or create any kind of relationship or care and attention around a particular use case, and very hard to communicate with, which is where apps solve a big problem in that respect because they're very automated, they're very clever, they're very, very easy to use. But again, when compliance issues arise, when you're sending large sums of money, very often flags, sanctions, stops on movement of funds can occur. Apps fail here because you can't call them simply, which is where a business like mine or ours it performs much better because we are very high touch, one-to-one with each business case. We understand the use case, and therefore we are able to react to any issues that may arise. And this is particularly important when it comes to settlement. If you send $500,000 to the UK or Europe, it is likely to be flagged and sanctioned and require additional paperwork at some point, which is where the former two don't perform very well. We've talked about market risk there. We've talked about settlement a little bit. The items here, we've got source of wealth, KYC, account, SWIFT, GPI. This is simply the requirements that the paperwork required to move funds internationally is quite strict. And this can either be front run and managed well so there's no friction, or it can be an afterthought, which is where problems can arise. Again, something that's a really important, should be the primary aspect of making large international payments. Case study. So this is a UK client we had, sorry, US client moving money into the UK. They were selling stocks to buy real estate in London. They were unsure of the process, and we were able to provide them a very, very close service around one, exiting the equities, and two, moving the funds into the UK. Now, what we're able to do is collect dollars in the US and bring them to the UK for them, rather than expecting a US bank to do that, which is can be a very stressful situation because they are not particularly geared up to making, believe it or not, US banks are particularly poor at making international payments. So we were able to save a large amount of money on fees and transaction costs, infinitely better rates in terms of the rate they achieved, and strategic gains. We're talking about timing and execution of that transaction, helping them understand the market so they could enter the market at a time which was more beneficial. Deal management is simply where any additional KYC was required or paperwork, we were able to ask for it and gather it quickly and move on quickly so that they didn't feel delays or any friction when moving into their associated real estate transaction. Talk about consultants, choosing the right consultant. Again, this I think I've probably touched on this already, and that's really down to the use case. If the numbers are small, apps are great, they perform very well, they do a very good job. But when the numbers get larger and there is a need to and a desire to want to know where money is at all times, these types of businesses like mine do a much better job because you can communicate, and communication with these transactions is really important. Remember, world compliance has become far stricter over the last 10 years, far more kind of clunky, really. It hasn't improved. And world banking and world transactions or international payments haven't become the one part of finance that haven't improved. They've actually got worse because of the need for checking, AML, money laundering, and things like that. The only way to manage that is in a very hands-on basis. So I think to that point, that should hopefully cover off most of the question that was asked. And I think it really, like I say, to sum up, it comes down to the most important thing, in my opinion, is making sure that money goes from A to B without any friction or stress. To achieve that, it often takes quite a lot more sort of help or manpower than just relying on very cost-effective but very poorly from a efficiency point of view, apps, etc., don't perform so well.
Great. Thank you so much, David.
No problem.
So we will come on to Jamie next. If there are any questions for David, feel free to pop them in the chat and we will come to them at the end once we've heard from all of our panelists. So Jamie, we will come to you next to talk tax. So our question for you is, what are the tax responsibilities, the key tax responsibilities in both countries for US expats moving to the UK, and how can you avoid issues such as double taxation?
Thank you, Alice. Thank you, David, too. Right, so I haven't got any slides this afternoon. I started to prepare some, and by the time I got to the 10th slide, I realized I'd be talking for hours and hours. So today's talk comes with a huge caveat. When you're thinking about moving to the UK from the US, make sure you go through a complete UK entry planning exercise, get the right advice from a tax advisor, from an investment manager, from whoever you're going to use to do your FX, like David, for example. It's really important because what I'm about to tell you today is not the complete picture. I could have spoken a day alone just by myself, just talking about some of the key points from a tax perspective. So I will really focus on the specific question I've been asked today. And it might not be exhaustive, but I think it will be helpful. So with regards to your US and UK tax reporting obligations, when you move to the UK, if you're a US citizen or a green card holder, your obligations to the IRS and the US don't go away. You continue to have to report and file US tax returns and declare your worldwide income in the States. You will probably continue to file a federal tax return. You will have an obligation potentially to file a state tax return, and you might have some new obligations too. For example, once you have assets overseas, like foreign bank accounts, there's a new form that you have to complete, which is referred to as an FBAR. It's a foreign bank account reporting form, which you will need to complete every year. There are other forms too, depending on what overseas interest you might have, for example, overseas trusts, non-US companies. All those forms need to be filed and dealt with the IRS on time. Otherwise, there are some quite significant penalties that could apply. So just bear that in mind. Now, when we're thinking about submission of US tax returns after you've left the US, you'll all be well aware that the tax year for US purposes is the calendar year. Typically, you would file US tax returns, pay US tax by the 15th of April if you're in the US. Now, if you're actually not in the US, you're in the UK, you get an automatic extension to your filing deadline to the 15th of June. And then there are further mechanisms to extend that even further. So 15th of June is automatic. You can extend your filing date further to the 15th of October, and you can extend once again to the 15th of December if you need to. If you're going to to file past 15th of June. It's important that you file extensions to do that, otherwise your tax return will be considered late. If you file your US tax returns late, penalties will apply for the late submission. They can get quite pricey. So if you have a tax liability and file late, penalties could rack up to 25% of your tax liability. You still have an obligation to pay your US taxes by the 15th of April if you have a US liability. So you need to work with your advisor to estimate what your liability might be and to pay it on time. Otherwise, again, there's late payment interest and late payment penalties which might apply. So it's important to get that right. You're, as an American in the UK, you're going to have a dual filing obligation, which is why you have dual UK US experts in the UK, because we can navigate the complications of the US alongside the complications of the UK. You will also have a UK tax filing obligation. Unhelpfully, our fiscal year ends on the 5th of April for some odd historic reason. So the UK's tax year and the US aren't coterminous. So there are some reporting positions to navigate there. But very simply, you're required to notify the UK tax office that you have an obligation to file a tax return. So unlike the US, not everybody in the UK files a tax return. You have to recognise that you might have an income tax or a capital gains tax liability here and register yourself to file a tax return. You're likely to become UK resident on the date that you move here from the US. So if that was today, that's during our tax year ended 5 April 2025. So you'd register to complete a tax return for the year to 5 April 25. Filing deadline for that tax return is going to be the following 31st of January. So year end 5 April 25, you would file your tax return by the 31st of January. As an American, we generally recommend that you file sooner than that, because I'm going to explain in a moment some of the areas we need to manage for double tax risk. Knowing your liabilities, filing early is really important as an American in the UK. Like the US, in the UK, if you don't file on time, if you don't pay your taxes on time, there are interest charges and penalties that might apply. Typically, in the UK, your liability is going to be payable by the 31st of January if you have one. As an American in the UK, however, we generally recommend that you pay your liability earlier, before the 31st of December. And I'll explain why in a moment. Now, probably the most interesting part of what I'm going to tell you today is kind of matters around kind of double taxation and the double tax risk that taxpayers face here. When you're paying tax in two jurisdictions, there is a risk that you're going to pay tax in one and not be able to take a credit for that tax in the other jurisdiction, which wouldn't be a very nice outcome. You could end up paying 45% tax here in the UK, which is our highest marginal rate of tax, and you might end up paying 30 something in the US, and it doesn't leave you much change out of your income, whatever the source of that income might be, because if you can't get a credit, you're going to end up paying over 70% in tax. So let's think of some of the ways to manage that. Well, if you've got a UK tax liability, most of the time, if you're a UK resident, you're going to want to take a credit for the UK tax you pay in your US tax return. Now, in order to be able to do that and match the UK tax to your US tax return, it's usually important to pay the UK tax in the same year that the income will be taxed in the US. So if you receive income which will be reported, for example, in the year end December 2024, that's going to fall in the UK's tax return for the year to 5 April 25. Even though for UK purposes, the tax isn't payable until January in most of the time, we would recommend you've identified the liability and paid the tax before before the 31st of December so that you can match the credit to your US tax return. If you're unable to do that and you're late, there are opportunities to carry back up to 1 year. If you weren't aware, you've just arrived, you didn't get advice, you get it wrong in year one, we can help you fix that. But you want to avoid that problem because it means having to have conversations with the IRS. You're asking them for money back. It's much easier to get things right in the first place. So that's key, is to pay the tax in the UK in the same year that you report the income in the US. The other thing to bear in mind is that the UK and the US have a comprehensive double tax agreement in place. Typically, once you're UK resident, the UK is going to have the primary taxing right over all of your income. So you will pay tax here, and the US are forced to give a credit for the taxes that you've paid in the UK. That's the main kind of method of avoiding double taxation on your income. So the UK will have the primary taxing right under the treaty. In your US return, it's very important that whoever prepares your tax return is aware that you need to treaty resource in your tax return. US tax preparers are great with domestic rules, but they're not very, very international focused at all. They can be very parochial. They will try and argue that US income should be treated as US income and you can't take a foreign tax credit against it. That's absolute rubbish. They need to probably be shown how to treaty resource. Effectively, you pretend in your US tax return that your US income is foreign income, and that allows you to take a credit for the UK tax. If your US tax preparer can't do that, you need to speak to a specialist like us, and we can help you do that and avoid double taxation. One other thing I mentioned earlier is getting the right investment advice. Tax treatment in the UK on certain investments is different to tax treatment in the US on certain investments. Things like US mutual funds can cause a problem in the UK. That's because US mutual funds might be taxed at income tax rates in the UK, lower rates of capital gains taxed in the US, which creates a tax differential that you want to avoid. It's just one example. There are many pitfalls like that, so you need good investment advice. Yeah, so some of the complications we come across with Americans in the UK, the types of income and double tax issues that arise. If we look at the treaty and we think about pension income, so if you're retired, you're returning to the UK, you've got US pension income. Social security from the States is only taxable in the UK. You shouldn't pay any tax on it in the US. It's exempt in the US under the UK-US treaty and should only be taxed here. It's very important to get that right and to avoid double taxation on your social security. Pensions generally, pension income should be, other than social security, would be taxed in the UK, and then you would take a credit for the UK tax in your US tax return. The only exception to that is with lump sums received from your pensions. Lump sums will only be subject to tax in the country in which the pension scheme is based. So a UK lump sum is only taxable here, vice versa. The one other thing to bear in mind, if you have Roth IRA pensions, which have tax exempt status in the US, the UK will recognise the same tax exempt status in the UK. Again, that's all outlined in the treaty. Other things to bear in mind, employment income. If you're moving to the UK, but you're still working for a US employer, you need to take advice to avoid paying US tax on your employment income. Because if you're performing the duties here, you should be paying the tax in the UK and probably taking a credit in the US or claiming something called foreign earned income exclusion in the US on your tax return. But it's very important, just because it's a US employer, don't think that you have to pay US tax on that income if you're performing all of the duties here. Other things, capital gains, the taxable here, not in the US. The US have to give a credit for the capital gains, even if it's US stocks. The only exception to that would be real estate. So wherever real estate is located, that country would typically retain a taxing right, and you'll be allowed to take a credit in the home country. There are a few of the highlights. I could talk for hours, Alice, but I won't. I will now pass the baton to
Fantastic.
you and Amy, but I hope that was helpful.
That was great. Thank you so much, Jamie. And we've got a couple of questions as well that have been submitted for you and David that we will come back to after we have heard from our final panelist today, Amy Morton. So Amy, our question for you today is, what are the key cultural and societal differences between the US and the UK that expats should be aware of?
Yeah, thank you. Thank you, Alice. Let me just, I've got a couple of slides as well. So let me just share my screen. So I'll start with saying moving between the US and the UK can involve a number of cultural and societal adjustments, and I'll explain just a few key ones in a second. But firstly, I thought it might be important and useful to understand and be aware of why. Why is it important to be aware of these cultural differences? If we can look well, the statistics say it all, and this is taken from a worldwide healthcare global provider. 87% of people experience some form of cultural shock when they move. What do we mean by cultural shock? We mean feeling lost, out of place in a new environment due to different customs, language, and social norms. These can lead to feelings of homesickness, 73%. Feeling isolated and burnt out. Let me move that. There we go. These are significant numbers. 98%, struggle with the relocation process, how to open a bank account, how to rent, buy a house in the UK, navigate the medical system. There's so much that people, a lot of expats I speak to, just feel completely on their own. They've got the tax advisor, they've done the immigration, they've got financial advice, but what about the day-to-day things that people need to be aware of? People are just feeling completely lost. There's a lot of overwhelming information out there. Where to start? It's a shock culturally, and it's really, really important to minimize this. The more support you have, the more you can plan, the more successful and happy you'll be in the UK, and quicker as well. I always say it can take maybe up to 18 months to actually culturally adjust to a new culture. So it's important to be aware of that and allow yourself time to get it adjusted to the changes when you move country. It's a significant step moving to the UK from the US. And, like I said about getting the financial planning done, the immigration, your visa sorted, the shippers are sorted, but the day-to-day life of making the UK feel like home is just as important. And I want to talk about some of the cultural differences today, because the UK and the US share a common language, we share the same cultural heritage, but we do differ significantly in various aspects, including government structure, the legal system, education, healthcare. But because of the expectations of the UK being so similar to the US, I have a lot of US expats that come over and actually surprised at the differences. They come over thinking it's going to be exactly the same. So I have people come over from Asia who are adapting actually surprisingly well, because they expect it to be very different. They expect that everything's going to change, whereas people from America think it's going to be the same. So I'll just touch on some of the day-to-day cultural differences that have impacted some of the US expats most. So here we can see there's just a few here, and I'll briefly touch on them. Like Jamie, I could go on and on, a couple of days about these, but we'll start with communication and language. British culture being, I think Americans can sometimes come across quite direct, and they want to actually get things done. The straightforwardness is often valued more in the US, but the English language we can be filled with sarcastic and dry humour, and particularly using self-deprecation and irony is integral to British communication. We use a lot of sarcasm, and I think it's helpful for Americans, especially in the workplace, to know that. I think we can use a good example of customer service, lack of in the UK, potentially, widely. The US, there's kind of customer service, they kind of have swift resolutions, they have real can-do attitude, they're very, potentially they can be quite, more friendly than some, I'm not saying all, some services in the UK, they're very enthusiastic, but we're very, very formal and reserved over here. So that's just very something to be aware of. day-to-day language, words such as, it's obvious, these things can be obvious, but actually can affect you more than you think. Words, you know, faucet, taps, chips, crisps, cookies, biscuits. I seem to be using food a lot in this example. It's like time of day. But they're small, but I say they're a day-to-day constant reminder in the UK. These words constantly remind you of being back at home. And small niggles like this can get to you. They can exacerbate homesickness. So it's just something to be aware of. Cultural etiquette, the social etiquette is essential for building meaningful connections, again, particularly in the workplace and socially, to ensure that you can integrate properly in the country. Little things like queuing is taken exceptionally seriously in the UK. And the British, again, when we greet people, we can seem quite reserved and less likely to engage in small talk compared to the Americans. That's just something, a small thing of social etiquette. There's a huge topic that can be covered in this, but I'm just briefly want to touch on all of them. Work culture, work-life balance in the UK. On the whole, again, these are things on the whole, we do emphasize work-life balance more than the US. We don't work as long hours every day, and taking holidays is actually encouraged. We do have a lot more holiday and bank holidays than the US. So health and well-being is particularly in vogue in the corporate setting at the moment, and caring about employees. Other things to be aware of is hierarchy a little bit. There is a strong sense still of hierarchy in the UK, sometimes in the corporate setting. It's addressing senior staff. There is a ranking, you know, manager, senior manager, VP, SVP. There is still some form of hierarchy. I say that, but offices are going towards open plan settings now to negate that. Other things next on the circle here is daily life and amenities. Public transport widely used, so owning a car is less common in urban areas compared to the US. Everywhere normally in the US you need a car to get around, but there is a good system of public transport here. Potentially won't maybe mention the trains at the moment. There are they're not so reliable, and navigating getting a ticket on peak, off peak is a minefield, even for an English person here. So that takes a while to get used to, just something to be aware of. Don't feel like you're on your own trying to navigate tickets. Everyone has issues here. Medical, NHS versus private insurance. That is a big difference with the UK. We do provide free healthcare. You know, for most residents, that is what we opt for, but I think it's important to be mindful of like long waiting lists for appointments, potentially, depending where you are in the UK, and the waiting times for emergency care. Standard may be different to what you're used to in the US, but that's why private medical insurance is an option, and would encourage you to kind of look at that. But you know, medications, we're lucky to have prescriptions that are subsidized here, if not free for certain people, which is a huge benefit that can't really be taken too much of advantage of. We're lucky in that respect. Next on the list is housing. Housing in the UK on the whole, again, are often smaller, narrow hallways, staircases, less inbuilt storage space than typical American homes. A lot of the UK homes are semi-detached, which is different to America. The process of buying a house can be quite lengthy here. Small things, again, these are small things, but they are big bugbearers when I talk to expats in the UK. You know, taps, faucets, we have hot and cold taps. It's very rare you get aircon in the house, particularly in the cities in the summer. It can get very hot. It's rare to get basements. These are things that come up all the time. They sound like small again, but they are always coming up, and it is the small things, the things that you need to use day to day that lead to homesickness, that lead to you wanting to return home back to the US, sorry. Food and drink. I think this is a massive one that always comes up. British cuisine is diverse, but differs significantly from American food. Again, Americans can think it's exactly the same, but it's not. They get here and they're upset. They're longing for the familiar tastes back home. You know, little things. I'll go into the detail of this one. Authentic Tex-Mex cuisine, enchiladas, fajitas, pizza's not the same, ranch dressing, bagels. It sounds, again, minor when you talk about financial and tax, but day to day, again, it creates, you feel lonely, you feel like isolated. It takes time trying to find these things or come up with the same kind of recipes. It reminds you of your family back at home. Drinking culture, pubs are a big part of social life. Drinking culture is more prevalent after work pub visits being common, and it's these social settings in work that can often lead to building up of relationships. They are not to be overlooked. They're really, really important. Driving and transportation. Driving in the UK, people drive on the left-hand side of the road. This does take getting used to. And as I already said, owning a car in the cities is less common in the US. There's a lack of parking spaces in London specifically. It's expensive to park, expensive to drive in cities. And we do have an extensive public transport system. So why do we need to be aware of these things? Again, I spoke quite quickly there. Just wanted to cover a few of the common ones that come up with the American expats. We need to be aware of this because of this common line. This is the common typical journey that clients go through when relocating, not just to the UK, but anywhere. They go through excitement at first, they're preparing, they might be stressed, at the preparation stage, but it's still exciting. They're looking for, financial help, wealth management. They're looking for immigration, shipping, who to go to look for schools for the children, housing. They get here, they're in a honeymoon stage, like, great, wow, look at the culture of the UK, look at the historical castles, the palaces, the countryside, the quaint pubs and villages and cottages. Beautiful, they want to go, it's exciting, they want to go and visit. But it's when you start needing to try and integrate and live as a resident and stop acting like a tourist, that they experience culture shock. Some will experience it, everyone experiences it to some level. If you haven't got the support, this can last for years. You can slowly go down, trying to integrate. You're not integrating into the UK as much as you'd like. You're still feeling like a tourist. You've had no support, no plan in place, and no encouragement to navigate the UK. We're starting to slowly just try and survive. Every day you're longing to go back home. This is where you need support. You need to have a personalised plan and make sure you're kept accountable on small goals to integrate into the UK where you can thrive and perform. We want you to, enjoy life in the UK. Is a great place to be. We don't want you, you've made the step, you've had the confidence to move to the UK. That's the biggest step. Now, the day-to-day life and drudgery of it can stop you, thriving and performing. Remember, why did you come here in the first place? It's really important, but it's very difficult when you haven't got anyone there to remind you of this. It's easy to say. So how do we mitigate these effects? You want to go from being an unsettled expat to fully integrating into the UK. There's so much. It's easy to sit there at home and look online. How can I integrate and look at all the social media helps. It's got lots of ways, lots of groups to look for, but you need someone to give you the confidence to go out and do this, give you the places to look for, the right places as well. You can waste so much time trying to get into the wrong hobbies or the wrong activities. Embrace the differences of the UK, I say. Stop being, it's easy to be negative. Or in the America, they do it like this. Well, you moved from America, so, for whatever reason, just potentially try and have a positive outlook, shift your mindset. I think just after looking at those things, it's, in conclusion, understanding the cultural and societal differences is imperative to be able to adjust in the UK. You need the toolkit and the plan, the right support to shift, like I said, shift your mindset, be positive, know how to navigate the UK system, know what you need to look for, the starting point of, getting an NI number, where to go to try and set up a UK bank account, and what documents do you need. To have that all in one place is important, so you can spend the time to successfully start feeling at home in the UK. And the clarity that you have about navigating this life will reduce your culture shock, and it will reduce your yearning to go back home, and will hopefully help move forward in being confident that you've made the right decision to be in the UK. That's it for me. Very quick. there's a lot to talk about.
That was great. Thank you so much, Amy. That was absolutely brilliant. So we have had a few questions come in. So our first question, I'm not sure if this is to David or to Jamie, maybe to you both. Someone's asked, as an American, when I live in the UK, how do I pay any US tax bill to the IRS? And can I use a non-bank money transfer if I no longer have a US bank account?
Yes, from me. That's probably all you need to know. But Jamie, it's probably more your jurisdiction. Yes, I can make payments to for that purpose for sure. So from what I'm able to do is create sterling and dollar accounts in the name of the client that can both collect in the US, so collect USD through Fedwire or ACH, and then sweep back to the UK, or transact from sterling into dollars and again pay via ACH or Fedwire to any beneficiary that the client would like.
Great, thanks, David. Jamie, anything to add?
Yeah, just to add, so David's solution is a very good one. If it's not suitable for whatever reason, there are portals that you can log into linked to the IRS, and you can use kind of UK bank and UK credit cards on to make those payments. You're not going to get as good an FX rate, I doubt, going that route, but there are other methods too. Yeah.
Great, thank you. And someone else has asked, David, I think this is one for you. Given the situation in the US regarding politics at the moment, firstly, how do you see the dollar performing against the pound? And secondly, given I'm expecting to move in early 2025, do you think it's better to try to move money sooner to take advantage of today's rates rather than wait and see what happens? And is there any way I can protect myself?
Yeah, it's a really good question. And the answer to where the market or where the dollar is likely to be in 25 is the best economist in the world can't give you an answer to that with a great amount of assurance. What I will say is right now, we always look at markets in the very short term, the medium, and the long term. And I won't go into the weeds on that now, but to give you an example, if you were looking to trade in the next, when I say short term, I mean 1 month. Medium term is 6 months. Long term is anything longer than that. Right now, sterling dollar has broken resistance levels, previous resistance levels to the upside that have pushed it into a new upside trading range. What that means is the rate of sterling to dollar is going higher. That means anyone selling dollars to buy sterling is impacted negatively by that move. It's not catastrophic. It's nothing to worry about, but it's a significant turning point. That's something I would want to discuss individually with someone because it's a very long-winded conversation, but it's a very important one nonetheless. To answer the question around protecting from that type of move, there's two things you can do. You can either sell dollars and buy sterling now, which gives you the assurance of the exchange rate, but that would mean moving a notional amount of dollars into sterling, which is very possible, very doable. We can do that, hold sterling until required. Or you can take what's called a forward contract. That is a contract to sell dollars on a date in the future at today's rate. So it means you can protect today's rate for delivery in the future without having to settle the transaction. So from a cash flow point of view, it means you hold your funds until you need to move them into sterling. So let's just use January 25 as an example. This way you keep your funds in dollars until January, and then in January you take today's rate then. The only downside is that if the rate comes back or becomes better, you are still obliged to utilize that rate that you booked today, if that makes sense.
Yeah, that makes sense. Thank you, David.
But to answer the question on the market, sorry, very quickly, right now, sterling dollar higher. And I think that just very quickly, we've seen a very good example of the UK election. That was as close to a sure thing as you're going to get. Brexit wasn't a sure thing. We saw what happened to the market. US election, I think, is far more ambiguous than the UK. Please, somebody would love to talk about it. Correct me if I'm wrong, but right now I think from what I'm told, it's fairly even. We don't know what the outcome's likely to be. It could go either way, and that's what markets hate, which means that the reason we saw sterling gain ground through our election was because the market wanted certainty. That's all it wanted. It didn't care who gave them that certainty, which is why we saw a Labour majority as a sterling benefit. We don't. There's a lot of outliers to a Biden or a Trump or whoever it may be taking office again. The market is unsure about what would happen in a Trump office again, which means that right now, go back to what I said earlier about the stock of a nation, the market doesn't want to seem to hold dollars, which means it's selling dollars and typically looking for safe haven in either euros, sterling, or dare I say it, in some respects, further east. And it's quite a clear flow of funds, which is impacting anyone selling dollars to buy sterling now. But again, anyone's more than welcome to reach out to discuss that in more detail because there is a bit more to talk about, but I won't do that now.
Great. Thank you so much, David.
No problem.
Jamie, one for you. From a tax perspective, is it better to sell my US home before or after I arrive in the UK and buy a home here?
The answer is that it depends. So you do have to look at your US tax position versus what the UK position might be once you're here. If there's only going to be a short time window between arriving in the UK and selling your US property, then potentially the sale would be entirely exempt from UK capital gains tax, because even though it's an overseas property, as it's been used as your main home, it would qualify for our principal private residence exemption. Now, that wouldn't be the case if there had been a period, for example, if your home had been rented, then it might not be fully exempt, in which case you might want to consider what your US liability is compared to the UK liability. We often advise clients maybe 6 to 12 months before they're going to return to the UK, so they can weigh up the UK tax exposure versus the US or the dual tax position and make an informed decision. So some clients have accelerated the sale date for that reason. With UK entry planning generally, whether it's main home or other assets, it is often the right answer to do as much kind of cleaning up and selling assets, etc., before you arrive. Is often a good planning point. There are new rules being introduced in the UK. We're not sure exactly how they're going to be enacted because of the change in government. Once we have the financial budget, which should be in September or October, we'll have more clarity. It's currently proposed if you haven't been resident in the UK for any of the 10 previous tax years, in the year you arrive, you have 4 tax years in which your foreign income and gains are not subject to UK tax. Now, that's going to it's a very good and valuable planning point for non-Americans, but it will also benefit Americans to a certain extent, at least just to simplify their tax filing requirements, because it might mean that they don't have as much of a double taxation risk around some of the areas we've already discussed today.
Great, thank you, Jamie. And I've got one more question for you, Jamie, before we've got a couple for Amy as well. So someone's asked, are there benefits to speaking to a dual UK and US tax consultant before I move to the UK? And is there anything I can do in advance to keep my overall tax exposure low?
Yes. Yeah, so as I've said, yeah, we would recommend UK entry planning advice being taken. You need to but some of this is going to depend, the timing is going to depend on these new rules that are just outlined around the new foreign income and gain rules, which will apply. If you qualify for that 4-year exemption, then UK entry planning will take a different form potentially. But currently, pre-arrival, you need to look at your assets, look at your investments, see what investments are going to cause an issue if you still hold them when you're in the UK. Think about restructuring your investment portfolio. Think about whether you should sell certain assets like the main home or something else prior to your arrival. Think about rebasing the value to the market value. think about your pensions, whether you should be taking lump sums before you come to the UK or doing anything else before you come to the UK. You would, what else might you think about? I think that's it really. Just just a complete overview of your assets and what it means once you're in the UK versus what the current position. If you're going to be in an adverse position, you want to do some cleaning up before you arrive.
Great. Thanks so much, Jamie.
Okay.
So Amy, a question for you. Someone's asked, I'm going to be arriving in the UK about 6 months before the rest of my family. What issues might I face and what can I do to help them and me get through that difficult time?
Oh, that's quite a broad question, but I'd say, well, it depends. If you need to get obviously the immigration sorted, but that's a very important one. Look, are you going to be working? Or is it family visa? It's important to have a look, kind of get a job as soon as you can. Look ahead for that. I'd always plan. So I work with US expats 3 months in advance. I think 3 months is a good lead time before settling into the UK. And there's a top 10 things that I suggest that they need to look at, including banking, setting up a UK bank account, because, for example, you can't rent a place until you've set up a UK bank account, and that's one thing you really need to look at. And yeah, I think housing areas vary widely in the UK. Where are you looking? Are you looking at England? Are you looking at Scotland? Because they're very, very different. Are you looking at city or, you know, or the countryside? I'd look at, you know, in advance if you need to rent a car. I'd look at that in advance. And social groups, I'd already start looking at, you know, start talking to people, maybe on Facebook in groups, start building up your network already, so that when you get to the UK, it's not going to be a shock. You're not going to feel lonely. Yeah, it depends also on how the age gap at school or like work you're looking at. It depends. But each person is bespoke, obviously their circumstances. But there is a good top 10 things that I normally advise expats to look at before coming over to the UK.
Great. And then final question that we have before we wrap up. My company's relocating me to the UK. I'll be living here on my own. How can I meet and make friends with people outside of work?
Yeah, so I've already kind of touched on the social media element of it. Facebook have, you know, meetups in every single town for expats specifically as well. They're everywhere. Facebook is a good place for that, but I always advise be careful with those as well, because if you start socializing with people from America, from the US, you're still gonna feel like an American in the UK. You're not going to feel like you're integrating. You're not going to meet other social circles. It's very easy to stick with the same, you know, groups from America, and then again that exacerbates homesickness. You're all talking about back in America and what you miss about America. We're just humans. That's naturally what you'll do. So be careful about the Facebook groups. Work, you know, again after work, do mix with people from work, because they will introduce you to, you know, other people, especially particularly in cities when we do after work drinks. It'll very quickly, you can grow your social circle. And it'll just expand. I think if you're renting, again, if you're going to be renting in the UK, there are a lot of house shares. And they are a good way. It might sound scary at first, but they are a good way. It's how most people rent in the UK when they first get here. And it is excellent to meet people that way, because you're both living in the same area, so you've already got something in common. They'll be able to then help you with the local area around you, introduce you to their friends, introduce you to other clubs and societies. And I'd say they're the main ways.
Great. Thank you so much, Amy. So that brings us very neatly to the end of our webinar today. So thank you so much to everyone who has joined us. We will be sharing the webinar recording with everyone who signed up. So if you missed any of it today, look out for the full recording in your email inboxes soon. If you're looking for advice in any areas of expat, tax, finance, and wealth management, visit expertsforexpats.com, where you will find plenty of blogs, guides, and resources. And if you're looking for expert advice, you can always use our free introduction service to connect with an expert, like the people you've heard from today, for your specific financial situation. So thank you so much to our panel, and thank you all for attending today. Have a great rest of your day.